Hello, everyone. My name is Alexandra. I'm partner at Ruvento Ventures. Today, I'm proud to be hosting the panel on Integrate the Investee topic, and I'm happy to welcome our amazing guests, Katherine from BP Ventures, Robert from Lauda, and Sabrina from Robert Bosch Venture Capital. And I would like to take a few words to introduce myself and our fund. So Ruvento Ventures is a global seed deep tech venture capital firm, which is operating on the global scale from Singapore, CEE, and the United States. So we were established in 2014, run several acceleration programs in robotics in Singapore. Then when I joined Ruvento, I was opening our office in San Francisco and in CEE as well. So today we invest under two core strategies. We back companies in AI, quantum computing, robotics, IoT, and new materials in the US. And we also back really undervalued companies with great potential from CEE and help them get to US through our mentorship from top YC alumni who are venture partners and advisors. We provide deep tech expertise, connections with VCs in United States and other parts of the world. So that's about all on my side. I would love to answer your questions afterwards, and I would love to pass the word to my colleagues that are here today. So probably, Katherine, you can start introducing yourself.
Hi, and thank you for inviting me to speak today. I'm Katherine Herzog Parsons from BP Ventures. BP Ventures is the corporate venture capital fund of BP. It was set up more than 10 years ago to identify and invest in private, high-growth, game-changing technology. And since then, we have invested almost 700 million and have 31 active investments. We are stage agnostic, investing in seed to Series C, and we are a very collaborative investor. We've invested alongside over 250 co-investors. We take a very active role in our portfolio and aim to take a board seat on every investment we make. We are global with 18 people split between San Francisco, Houston, London, Shanghai, and Singapore, with a partner in Israel. It is a particularly exciting time to be at BP, as this year we announced our new ambition and strategy. We have committed to be net carbon zero by 2050 or sooner, which means tackling around 415 million tonnes of emissions. We are focusing on 3 areas of activity: low carbon electricity and energy. So as a company, we'll be building at scale renewables and bioenergy and seeking early positions in hydrogen and CCUS and building out our gas and low carbon portfolios. That means by 2030, we will increase our investment in low carbon to around 5 billion a year. The second area is convenience mobility, putting customers at the heart of what we do and helping accelerate the global revolution in mobility. By 2030, we are aiming for 20 million customer interactions daily. So that's twice that we have today. And we will continue to do resilient and focused hydrocarbons, maintaining an absolute focus on safety and operational reliability, while also driving down capital and cost and emissions. By 2030, oil and gas production is expected to reduce by at least a million barrels of oil equivalent a day, or 40% from our current levels. So central to achieving all these goals will be technology and innovation, and that's where BP Ventures plays a key role in delivering this.
Thank you, Katherine, for the great presentation. So Robert or Sabrina, please take a word afterwards.
Ladies first, I guess. Hi, my name is Sabrina Jones. I am with Robert Bosch Venture Capital, and this is the venture capital arm of Bosch, as you may guess. So our CVC has been around for 12 years now. We have offices globally in Silicon Valley, in Tel Aviv, and in Shanghai since 2 years. And obviously, we have a strong presence also in Germany for the European startups. Now, we have about 50 plus companies in our portfolio and are into our fourth fund. We are a very financially driven corporate venture capital firm. And this is because we want to, our portfolio companies to get the best shot at becoming really large and successful companies. And this is why we take this really seriously. Also in the syndicate with other investors, we always try to make sure that also follow-on investments are secured, and we also lead rounds. So this is our investment focus. From a focus perspective, where do we invest? Basically, every topic where Bosch is into is a topic where we are interested in investing. So that's naturally everything in the mobility sector, autonomous driving, other mobility solutions, but then also enabling technologies like machine learning topics, AR, VR, IoT, distributed ledger technologies, analytics. So everything deep tech, I want to say, is interesting for us to look at. Something particular about our CVC, and this is also my role in this game, is that 2 years ago we launched Open Bosch, and this is a program. It's basically a venture client program designated to deliver partnerships between our corporate mothership and external startups. So this goes hand in hand with our investment activities, and I'm sure we'll talk more about it afterwards.
Thanks, Sabrina. So Robert, please go ahead.
Thank you so much. My name is Robert Tietze. I'm the startup manager of Lauda, Dr. R. Wobser, GmbH, and we are in this round, I would say, the smallest player. We're a typical small, medium-sized company based out of Würzburg in Germany, or south of Würzburg, actually. And we are into creating temperatures. So everything in regards to hot and cold, that what needs to stick today, that is something what we look into. We actually provide, as of now, process thermostats, which are typically in the range of minus 150 up to 300 degrees Celsius. And these you can find in the automotive sector for testing equipment, stuff like that, or in the pharmaceutical industry. So this is our core business, and our innovation strategy focuses on startups, internal innovation topics, and I'm here now today for our startup activities, and we do it kind of like the open innovation, as Sabrina just described. We are looking into corporations, fundings as well, but since we are a bit limited and from the size, we are looking for pre-seed and seed investments in deep tech startups, which are related to hot and cold. So that needs to stick today. Thank you.
Thanks, Robert. Thanks, everyone. So let's move to our panel discussion smoothly. And to add a couple of words on my side, of course, I will be happy to share experience on how our portfolio companies collaborated with numerous corporates like Japan Airlines, Arkema, NTT Docomo, and even Volkswagen, Hyundai, and many others. And the collaboration was very diverse, sometimes productive, sometimes a bit too long. And for a corporate, it is, on the one hand, for the corporate, it's very important to achieve its end goals, like increasing revenues or growing capitalization. And for this process, it is crucial to include business units in the investment process or your decisions. So I would love to address our first question. So how do you include those units? how do you make them participate and get incentivized to help you select the best investments and then help to integrate them. So probably I will pass the word to Katherine first, and then to Robert.
Great, thank you. So do we include our business units in our investment process? Absolutely. We are a strategic investor, so we are looking for investments which will help BP deliver their strategy and help us transition to net carbon zero and deliver the 2030 targets, which include delivering 50 gigawatts of renewables, 100,000 barrels of bioenergy, and 70,000 EV charging points by 2030 or sooner. And therefore, when we make an investment, we always require a business sponsor, and that's like a very key step in our investment process. We, as the BP Ventures team, have a very strong network across the business to ensure that we can engage the right people and secure that business support. I would say this is probably the process, the bit of the process that does take a bit of time, both kind of engaging on the ground level, the right people, but then also getting the senior level support for the investment. But what we find is that once you've got that engagement, they're often very heavily involved in due diligence, and they provide a lot of technical support. And we actually have had a lot of good feedback from our startups on how helpful this can be to their business and their thinking. You know, they're basically getting a sort of quite a lot of expertise and time with experts in their field to ask a lot of good questions and maybe make some suggestions. And then another sort of the kind of key next step is, as I said, it's not just kind of ground support, but getting the senior level support for the investment. So when we go to our investment committee, we do require a VP or someone very senior in the business to advocate for that investment. So you'll have someone from the BP Ventures team, like myself, advocating for the investment, but you would also have someone from the business on how it fits with their strategy and how they'll be working with the company going forward. And then once we've actually made the investment, the business itself appoints a relationship manager. So BP Ventures takes the board seat, but the business has a separate relationship, and they have a key person, the relationship manager, to deliver on that. And so we're not just looking for the financial returns, but we also do look for strategic value. And to secure this alongside any equity investment, we agree a commercial agreement which outlines how the business will interact with that startup, and the relationship manager is responsible for that commercial agreement. We find this really benefits the startups. From the get-go, they have a clear idea through that commercial agreement of how they will work with BP, how they will grow, and the benefits that BP will deliver. And then we, that's an ongoing thing. So a recent example of this would be FreeWire. We invested in $5 million in FreeWire in 2018. FreeWire produces power wherever and whenever you need it, without the added costs of construction or infrastructure upgrades. And we actually had our first deployment of their technology at a BP retail site this year, with their Boost chargers in California. And that's the first battery integrated ultra fast charging EV charger deployed in the US. So we're hoping for further deployment shortly.
Just a quick question here. So when you signed a commercial agreement with such kind of company, so do you share revenues like once this company starts to sell in California, or it's some other kind of commercial agreement?
So each commercial agreement would be specific to the deal. We're going to have a different relationship with each of the startups. It could be that we are providing, there's an offtake agreement and we're doing the offtake for a product, or that we're actually, doing the feedstock for something, or that we're going to develop something together. There are lots of different ways that we work with startups.
Great. Thanks, Katherine. Robert or Sabrina, would you love to also add a few comments on this, the question?
Yeah,
whether you integrate.
I would like to take just a few thoughts from Katherine. It's basically the same as we do it. So, but since we're a small, medium-sized company, we have directly the C-level involved. So that would also helps us. So basically, the process what Katherine described is pretty much the same for us. with the benefit that we have the C-level involved, and then our business unit managers are directly engaged with the C-level who's actually part of the deal when we do a commercial agreement with our startups. And sometimes it's not even necessary that we look into investments, since we're just going to be like project partners in joint research projects or stuff like that. So that is one method we use also quite a lot. So that's just, but in general, I would say we have a similar process set up.
So in our case, it's a little bit different. In our case, we don't need a business unit buy-in for making an investment. Instead, what we have is there is an advisory board, a quite high-level advisory board to RBVC, Robert Bosch Venture Capital, and basically this advisory board has it's only internal top management people, and they have a veto right on companies that we present very early in our investment process. And so they would enact this veto right in case, for example, the company is in direct competition to one of our business units, for example, or if they just don't see any kind of strategic fit at all. But in most cases, I want to say there is no veto, and we are free to invest. And then also there's no commercial agreement in that sense that is tied to the investment. So yeah, it's probably a little bit loose touch. So we act actually quite similar to an institutional investor in that sense. However, of course, in the due diligence process and so on, we obviously involve business units or corporate research to help us with the technical assessment and also with the business assessment to some extent. Now, what happens after an investment, and we still, of course, want to ensure that there's business relationship with Bosch business units. But one of the reasons we do it that way is because, and actually I'm curious, Katherine, in that regard, how you deal with this problem, because we are an early stage investor, and a lot of the technologies in startups that we find are so early stage that there is no business unit that can just take it on right now and transform it into a business. So in many cases, the business units, they get interested in our portfolio company like 2 years after we have invested. And this is particularly in technology-driven companies, I find this a typical thing to happen. So Katherine, I'd be interested how you deal with that.
Yeah, and it's a great question. I mean, I think what we find is sometimes we have to push parts of the business. You know, our job, I think, as VCs is there's one part that we're bringing startups for people to invest in, but the other part is challenging ideas, right? It's challenging the strategy, it's challenging where people are spending their time, and it's a lot of feedback from the market saying this is what's going on. You know, sometimes you'll see 10 sort of companies doing some sort of carbon capture and storage, and this is the thing this year, and you share it with BP and the right people in BP, so I don't see it as a one-off, hey, what about this startup? It's a much more of a dialogue where there are key people in the business that we're always talking to, you know, whether it's about digital energy. I'm very kind of linked into our gas and no carbon business, our power traders. It's a constant conversation about what do you need, where's the market going, what are we seeing, you know, and evolution, and then the right company at the right moment comes along and you can invest. I think also that a lot of we're talking as if we take everything to the business, but actually quite a few times the business will come to us with something that they have seen a company they like and say, you know, is this venturable? Could we invest in this? So it is that, as I said, it's a two-way thing. But yes, you're completely right that sometimes we'll take something, we think it's really exciting, but it just doesn't have that strategic fit at the moment. So then you're looking for that business sponsor, and that can be quite hard work. But we, for example, an example that maybe you wouldn't think was going to be in our portfolio, but we invested in Callista, which is a company that takes gas and produces protein. It doesn't necessarily, it was quite hard work for us to find that business sponsor, but in the end, they did, and we made a 30 million investment in it. And I think that's a really exciting company for our future, something that's producing kind of sustainable, low carbon protein.
Yeah, very interesting. And by business sponsor, you mean like the head of the business unit who will be full support of this investment and help you, to move this deal through the investment committee.
Yeah, so it's like, as I said, it's sort of it's a 3-tier kind of thing. Like, you need the kind of ground support, because they're the experts and it might be scientists in the field, or just the people doing the actual work who kind of see the application for the business, and then you will need a relationship manager appointed, and then you have to have this very senior level support at RIC to say that they support and they think it's a good investment. So for us it's kind of multi-stage to get there.
Yeah, and just to add a comment to Sabrina's question. So once, after you completed this deal, let's say with the one that transforms gas into proteins, so the relationship team, this business unit, may start working with it right after the investment, or you still sometimes need to wait until something happens with the startup after raising money.
Yeah, so generally we think that relationship starts from the beginning. We try and delineate between BP Ventures, who have the board director seat, and we're obviously representing the equity, and that business relationship. And we think it's helpful to delineate between the two. And that relationship generally, yeah, I mean, it may be that they're not producing straight away, so there may not be a completely day-to-day dialogue. It may take time to ramp up, but we definitely want that relationship to be there from the very beginning and be established. But as you say, it may be that the technology needs a bit of time to develop before it's being deployed in the business. So it may be something where the relationship develops a lot later.
Great. By the way, I have some kind of additional questions, which is actually quite important, and it's important to get your feedback on this. So, do you it's question to all three of you whether you actively take board seats in the companies you invest in, or you mainly take board observer seats, or just nothing. So, what's your policy in this respect?
Robert, please.
Yeah, now you should hear me. No, actually, it depends on the round. As I said, sometimes we just have the corporate or commercial contracts in place. Then of course it's not one of the topics. But from our investment cases, we do take active board seats. So we try to engage with the startup in the beginning to find out what are they looking for, so that we're not just on the table as a finance investor who just takes an observer seat. So we do try to give or add some value to what they're looking for. That's why we also just have the strategic investment scope.
I think that's a really good point, Robert. I think our policy is always to take a board seat, and we're a very active investor. But I think there has to be a listening to the startup and finding what they want from the relationship. What are their ambitions from that relationship, and understanding that, and proving that you're going to bring value. If you're taking that board seat, you need to be bringing value, not just the financial investment, but the expertise and the support there. And I think that's really important, for the ongoing success of the company and the relationship.
Yeah, thanks, Katherine and Robert. So Sabrina, if you can hear us well. Maybe you could also.
Hi.
Yeah. So the question
No, I just got kicked out. I guess internet connection is not so reliable in the German capital.
So I think it's everywhere now. So what's your typical process in Robert Bosch Venture Capital in terms of taking board seats in your investees?
Yeah, so we always try to take a board seat in our investments, or at least a board observer seat. This is just for us, like for once, our investment managers and partners are really experienced people. I want to say that, yeah, they have many years of experience in the industry and in venture capital, and like you guys said, providing value to the startup is one of the core reasons to do this. But also it is for us to be able to to learn from the startups what happens in these markets, to have an eye. Of course, there's a Chinese wall between the CVC and the rest of the Bosch company. So anything that happens inside of a startup that we get to know by our board members is strictly confidential and stays inside our CVC.
Got you. Great. Thanks a lot for this answer. So I would like to move to the next question, which is very crucial for most of the corporates. It is again moving to business units. And do you face in your organization the syndrome of kind of pushback from the employees and managers of the business units, so they just don't have time, or they're not motivated to integrate or help with startups you're looking at or believe could bring a lot of value to the corporate? So how do you deal with this? In this conference, it's also called the "not invented here" syndrome, which I absolutely agree with. It's for my side, I would say it's I never thought about this problem, but I got a lot of experience from the startups I talked to and how they deal with corporates and this issue. But first, I would love to ask you guys whether you're faced with it and how you cope with it.
I think I'd like to start on that one. Since we are as SME, so small and medium-sized company, we experience to get a buy-in from a business unit. You have to break down this barrier of what a startup is. So they're all tied up in their core business. That's what they're focusing on. That's what they're doing. But when my team and I, or when we bring startups to the table, then it's always crucial that we don't start, okay, this is the next big thing they're going to take off. That's the big next unicorn, because that's where you lose the people. So you have to, as Katherine called it, get the groundwork done, that everybody is committed in that it's a great idea. And we did it last year before the COVID situation. We organized a small startup fair in our company, and the fair that just went very well with our employees, and especially also with the startups. So we have a short list on startups where we engage quite a lot. So there were, I think, 5 or 6 startups at the fair, and they presented their ideas or their ready to sell products. And with that fair, all of the employees could engage with them, talk to them. It was a kind of loose atmosphere that you couldn't ask anything, and it went really well. First of all, our engineering department, at the time, they weren't pushed into a workshop scenario where you have to brainstorm what we're going to do with it, or they are going to help you. So, and they could engage with each other and talk about different things. And even the startups, when the fair was over, they came back to me and said it was the best fair we ever attended. Since you guys are really focused on your topics, we could learn what your problems are. And even for some things, we have a solution in place already. So we engaged in a whole different level with them. And that actually makes it much better, since the whole company now has a feeling, what could you do with a startup? Or, I mean, they're just engineers or good business developers themselves. So they are at the same level. So the engagement with a business unit now, when I said, oh, I do have a startup idea, I think it's perfect for your business obstacles, what you're facing, they engage quite better now. That's at least, and that's what Katherine also said, it's a two-way street. So when the business unit now comes to me and says, oh, we do have a problem here, or have you heard about this, then I can look or scout much better what their needs are. So that is what I experienced worked quite well for us.
Thanks, Robert. Sabrina, maybe you can add something here.
Yeah, so not invented here is a topic that we have actively addressed 2 years ago already. The thing is, okay, so Bosch is a huge enterprise, right? We have many thousands of engineers and a 120-year plus legacy of culture and you know, your own understanding of what the company is and what it does. So in this culture, the general mindset in the past has been, we are the best engineers. You know, we can do everything, and we can do it in the best way. And now, and I mean, this has been a trend for a number of years, obviously, but now even more so, with so much money in the market and the startup ecosystem, we have to realize more and more that this is not actually the case anymore. You know, there's a lot of domains where we are not the best, and where there's a lot of startups who become unicorns, and we don't make the unicorn business. So there has to be a mindset shift, and not invented here syndrome happens when people, you know, when they feel threatened. And obviously this is something you have to take seriously. So when I talk to an engineer in corporate research, and they may be working, you know, they have their entire career and their education based in one technological field, and then you present a startup that solves the exactly same problem with a completely different technology, then they may feel threatened. And also those people who work in corporate, a lot of times they are, you know, security driven. So they work in a corporate for a reason and not work for a startup. So they may even feel this fear more. So this is the overall picture, right? So changing the company culture towards more openness is really a challenge. And we have started with a lot of activities that address many of these issues. One of them is, for example, we publicly do we call it Open Bosch Award. So every year we award the best partnership between a business unit and an external startup, and we do this, you know, on stage at a huge conference with one of our board members of the Bosch Group, and then we do a press release, which is also very valuable to the startup. But these are things that we do to show the organization, hey, look, this is something that we need, and this is something that our management wants. So you may want to reconsider talking to external startups. And another aspect, I think, in Not Invented Here is, especially, and we're all, I think in this round and in the audience, many people are very technology focused. So what always helps is to put a business view into the picture. A lot of times, especially when people focus on technology, either they fall in love with it or they hate it. And then in many cases, when you want to build partnerships and commercial commercial relationships. You really need to think about the business side. And this can help to accelerate the process, to see if it fits or if it doesn't. If you figure there's no business relationship anywhere at the horizon because it's engineers and they want to play around or want to understand the technology, then you should abandon this relationship because it's not healthy for either side. But bringing this business view into the picture is also something that I see as my role and as role of our Open Bosch program, the venture client program, to gain more awareness about that. And also the awareness that startups need to do business. Startups don't have time to discuss for a year on topics when there's no concrete next steps anywhere in sight. Yeah.
Sabrina, that's an amazing insight on this award, Open Bosch Award that you have in your organization, many others. And can you give some examples on, in case there is a good match between the team of engineers and the startup, and you also see the business, firstly, who has to assess this business synergy as well, and that you can see that there is going to be some good business result as well. And then how you proceed with this? You invest in the startup, or you just sign a contract with them to generate mutual sales or whatever?
Mm-hmm. So when I now take my Open Bosch eyes and disregard our venture capital investments, so what is really important to the startups and what they should always look for when they interact with a corporate is really to understand what is the decision process like. Who's calling the shots? Who am I actually talking to? Is it just an engineer who who's really interested in the technology and may want to suck everything out of the startup, if I have to use blunt words, this is not the way to go. And also, so we're doing a lot of awareness also on how to interact with each other on that level, being sort of a translator between both parties. But for the startup, I think it's really important to understand who am I talking to, who is making the decision, what is the decision dependent on, what kind of information do I need to deliver in a POC, in a proof of concept. Is the POC actually working towards building a baseline for a decision? So what we do, we have a structured process in Open Bosch that takes every step of this early engagement, and we make sure that we frame the scope of a POC in a way that we end up at the end of the POC with a clear decision point, so that we can say, okay, now the POC is done. Either in the bad case, it's not what we expected, or it's not what the startup expected, and then we can abandon the process with limited resources invested. And but in case it turns out positive, then we have already taken the steps, and we have already involved the people who are relevant for making a decision. So a concrete example, in case we want to source a tool for let's say voice application chatbot, right? I may need to include people who do, we have some process called cloud onboarding that makes sure that all applications used by third parties in the cloud, that they get approved by our internal processes. So this process can take months. I better make sure that I include those right people early on in this POC, so that we don't have a delay for the next half a year after we find out that we really like the company. So yeah, I hope this answers your question a little bit.
Thanks, Sabrina. I would love to pass the word to Katherine as well. And there is also one question coming from the audience on that topic, on the integrate the investee. So maybe Katherine, you take your word first, if you'd like to add here.
Sure. So I think there were great points from Sabrina and Robert. Thank you for those. I think the idea of the startup fair, part of the business did something similar not that long ago, and I think that engagement and excitement around venturing and startups definitely gets some conversations going. And there are some different teams throughout BP who are trying to bring in startups, not necessarily to invest, but to work with and they do kind of days like that. And again, I think it's a great idea for sort of people to understand more about startups, more about venturing, but also see what technology is out there. On the flip side of that, I think we have to be very respectful of everyone's time, both the startups and the business. One startup once referred to themselves as being in the parade at this startup safari, and I think there is this kind of risk that that they're brought in just because they're really exciting and new and shiny, and there has you cannot waste people's time. There has to be a real intention to invest if you're going to do that. I think definitely from my point of view, just because as you were saying, Sabrina, the startups are limited in their resources. And then I think explaining the process, again, a really good point from Sabrina, that it's really important to explain the process so everyone knows. But for the business as well, and this is where I think if we've got a strong relationship with the business, if they've ventured before, we don't face not invented here, because they're used to the process, they understand what a startup can bring, and whereas for new bits of the business, we really do have to start from the beginning and explain how venturing works and what that could bring for them. But to be honest, from a very senior level, we have a really big ambition to be net zero by 2050 or sooner. And so from a very senior level, BP is committed to be open to venturing, to partnering, to acquiring. That it will come in many different forms, but for us to achieve that goal, we're not going to do it alone. And I think that we're very clear on. And what's really exciting is to see all the different bits of BP that are now involved in innovation, and we've got BP Ventures, which obviously takes the minority equity stakes, but 2 years ago we created Launchpad, which is actually a business building and a scale-up team, and they take majority equity stakes in companies that have like digital adjacencies for BP. And then we've recently this year we've got a new incubation team, and we've brought Justin Lewis in from external to take the lead on both that, bringing internal and external teams into the incubation process. So on all of this, I think we understand as a company we're not going to get there alone. We are going to have to take in external innovation, and actually as Sabrina was saying, in the new areas, there are going to be people who do things a lot better than we would have done it. So, for example, we've invested in Grid Edge, which is a great company where they use AI on buildings to optimize buildings for carbon cost and comfort, and they have a new FlexX product that they're launching, which actually delivers flexibility to the grid. And we would never have developed that product ourselves, but that's going to be a really exciting investment for us going forward. I'm actually on the board, so hugely biased towards that one, but it's a great investment. But that is, I think, an example where that's a great company. It's really important to our future strategy in being low carbon energy, but it's not something we would have developed in-house.
Okay, thank you, Katherine. Amazing. So there is actually a question coming in. So is there a conflict by nature between venture capital approach, looking for the disruption and unicorns on the one side, and business units that need a specific solution for a very specific issue in a niche on the other side? So, guys, who would love to take on this question?
I can just quickly add something on this. The way we look at strategic value and financial value, we now have a targeted IRR that is a combined financial and strategic value. So we can look for unicorns and disruption, and that will deliver huge amounts of financial value, and it may deliver some strategic value. But if there's something that's hugely strategic for the business, it may not be a future unicorn, but it's something that's going to deliver great value to our particular business, and deliver that combined IRR, then we could invest. So it's not particularly a conflict for us. And I would say that it's really exciting. With our new strategy, we'll probably be looking at a lot of disruption and a lot of startups that are challenging the very business that we're doing. So I think that will be kind of. Previously, we have invested in quite a lot of things that are quite niche to optimize our upstream business, and now we're probably looking at more disruption.
Thanks, Katharina. Katherine, Sabrina, please.
So
Robert. Yeah.
From our VC perspective, of course, we would like to have as many unicorns in our portfolio as possible, and actually we have one unicorn in our portfolio, company Graphcore. They make chips for machine learning on a large scale for data centers, and I don't think there's a conflict. I think the conflict would arise rather the other way around, especially when I look at partnerships and early stage engagements between startups and the business units. I can see more the problem that if a startup is really early stage, like even before they had their seed round, for example, and they want to engage and start working with a company, then first of all, it's in most cases it doesn't make sense. It doesn't work out because the level of readiness of the technology and the product is just not there. And also, when the startup is too dependent on the corporate from a financial perspective, like from dependent in the sense of they rely on the revenue of a joint development agreement, for example, or something like that, then it's really not a good situation for the startup. The startup should always make sure that they have many pillars relying their business upon, and I've seen it actually a number of times that partnerships, that are imbalanced like that, just don't work out long term, because the startup cannot rely on Bosch, on the business units for revenue and for securing their pipeline. So in that sense, I like it a lot more to have successful, strong startups and engage in collaboration with them. I think it's a much healthier business situation for both parties, and also from a perspective of, we are Bosch, we are a market leader in so many domains. We have to have that ambition to also work with the best startups. So, this is the mantra that I can tell everybody. Make sure that you really, from a corporate side, make sure that you invest your time with the best startup partners out there, because there's also millions of startups, right?
Thanks, Sabrina. So, Robert, would you love to add?
I'm just a comment. I would say it's the same thing. What Sabrina just said, that you face the problems the other way around. Because what I bring on the table, and when we even talk about investing in companies, is that we are openly discussing what the financial situation is going to be. Is it just going to be the benefit that we bring the market access from our company or our expertise to the table, or if they're strictly relying on our investment case? Because that's something what we also strongly advise against. Maybe we don't have deep pockets as the big CVCs have, but it doesn't make sense from our perspective, because we as a small, medium company know we have a legacy of 60 plus years, and we know what it takes to be successful. And that's what we also offer our startups as an advisor, basically, in that field, that when they come to us and we're talking about investments, that we always are looking for co-investors equally. I mean, could be an institutional or somebody else, but that's what we're strongly against, that we just jump in and then they rely totally on us. So that is also an issue I see, so the conflict.
I have some other questions coming in. Thanks, Robert. I have other questions coming in. So the first one, I guess everyone here should share their own opinion. So are American and Asian corporates more open to work with startups than their European counterparts? So guys, would you love to answer this question first? Maybe I can add a word.
So I can jump in on this from an internal perspective, at least, because Bosch is present in around the globe. I can say that a lot of times in our regional in our regions, that those colleagues tend to be more open to open innovation and collaboration. And I think this has something to do with they don't have a strong presence of internal R&D, so they're actually much more business focused, and a lot of times that's a driver for collaboration. But otherwise, I think it's probably more a industry-specific issue. I think there are industries that are more prone to be more open and by nature, and automotive industry is just quite a traditional field up to now. So that's at least the patterns that I see.
And building on that, I think it's industry and obviously the markets as well. And we've made some investments in China, and we obviously have many of our portfolio companies are US companies. Silicon Valley obviously produces quite a lot of startups, and there's quite a lot of noise around it as well. So I think it's a cultural thing, and then just the kind of scale of it. But I mean, that we'll look at. I think we're open, and we find the teams as open in Europe as we do in the US or Asian markets where we are based.
I would love to add here that because we've worked probably equally with all corporates, both US and Asia and European, I would say that I don't see much difference in general. It may be quite important where the headquarters and where decision makers are located. So even if, and here I would partly agree with Sabrina. So from my side, today the world is so globalized that actually there is no much difference. It's really more of the strategic value add, strategic fit here. So there is one more question actually, even though 5 minutes are left. So thanks all for your views on the not invented here syndrome. Does a consortium with other CVCs make it easier to get a technology accepted internally?
I can answer that. Not necessarily. So I think if what you're selling is a strategic value and a strategic advantage, the fact that a competitor may have invested may slightly gazump your strategic value story, because obviously your competitor's already invested or is investing in that round. It doesn't have to be like that. And in fact, if a competitor's invested in a competing startup technology, that can be quite a kind of push to make people think, well, hang on, they're doing it, should we be doing it? And a challenge to that. So, but I would say, sometimes it doesn't matter, and we've invested in technologies where I don't think it would apply, but sometimes I think it would not strengthen the strategic value, because actually your investment is going to differentiate you from your competitor. So, for example, we've got an investment, Finite Carbon, which is a really exciting. It's a forestry carbon management company in the US, and they develop they've got carbon offsets in North America with 40 projects and 3 million acres, and we have a large investment in them and hold a commercial relationship with them, and that there's a very commercial relationship that comes out of that, and I don't think if a competitor was invested necessarily we would have that very strong commercial relationship with them.
Yeah, I agree with Katherine here a lot, and I would add that I think one thing that startups can highlight when they talk to corporates to show the value that they bring is to actually show the people in the business unit, look, we are really successful. We have raised X millions in capital, to show the corporate counterparts really, how much effort you have already put in this endeavor. And I say this because a lot of times, especially when we talk about Not Invented Here, you will be, as startups, you will be competing against tendencies to build it everything yourself. And people tend to underestimate the time and the effort it takes to really build something. Even if you have the capabilities to do that, it will take you also years. And in those years, the startup will be even further. So to really show how much money you have put into this in form of resources can, I think, help a lot in the decision to do a partnership or to do a commercial agreement instead of the corporate just doing it themselves. And this obviously reflects back on the investors you have on board and the money you have raised.
Yeah, so there is one more question coming from the audience on how to contact Sabrina Jones. So I guess Alexandra, Tietze, and organizers of this amazing event can put in touch directly. I guess it would be the best way. Or there is also a messaging option in the platform active. So there is 1 minute left, and probably I would pass the word again to speakers on any recommendation to startups on how to collaborate as a final word, how to collaborate most efficiently with large corporates. And on my side probably would be what is the best way to approach them and further to collaborate. So both parts.
I can tell people how not to approach. Do not just become asked to connect to me on LinkedIn with no note or email or anything about, because we get a lot. And if you do get the chance to do your pitch, make it good, because we see a lot of them. And then on the second part of the question, I think really understand what the CVC is offering, and also what they want from you, and also what you want from them. I think that's really important. Have a really clear why would you want a CVC investing and not just a normal VC fund, and what's sort of the nature of that relationship, and then be open. I think the CVC should, hopefully if they're a good one, be offering you a lot more than just a financial investment, and there will be a lot of support, technical people in the business that may have some really great feedback. So being open to that and having a really strong relationship with them, I think can be a real help for success.
Yeah, I can add. So I agree with you, Katherine. Contacting is always an issue. So I want to take this from a perspective of how to engage in the best way for partnerships or commercial relationships with a corporate, or in particular with Bosch. I think it's a very good idea to have direct contact with people in a business unit already, because ultimately they're the ones who will make the decision to go forward or not. I'm just an intermediary in my role, and I can facilitate the negotiations and the communication, but I will not make a decision. So this is very important. So whenever you trade shows or places like this, nowadays difficult, but those are typically points of engagement. And what I don't actually recommend is some startups try to get into a corporation from the very top. So they try to get some kind of connection to a board member or something like that. Yeah, you will get some attention from high level, but at the end of the day, this just gets passed down. And if the solution is not really convincing, nothing will come out of it anyway. So I don't think it increases your chances at all. And another thing I would recommend is I've been in touch with a lot of other corporates who have also venture client units in place, like the BMW Startup Garage, for example, or our subsidiary Bosch Home Appliances. They have the BSH Startup Kitchen. Then there's other corporates who do that also very successfully. And I think this is something that you can rely on. There are sort of standardized processes, how to interact with startups, and this will help you facilitate the process. And you have a go-to place for questions, for understanding what's the decision process, who needs to be involved. Also, these units tend to pay for POCs rather than sucking out everything of the startup that they can, and but at the same time make sure that a proof of concept is going towards a decision at the end of the day. So we really do these POCs through Open Bosch with a specific goal in mind to create business impact for both us and the startup. And I think this is a really important point. And also, but if you engage with a corporate who doesn't have a unit like that, just make sure that you really know what you want to get out of the POC, and that you really understand how to navigate and drive the relationship towards a decision as fast as you can.
Yeah, I guess there's not much to add from my side. I always say have your story straight. Basically, what does you bring to the table, or you think you bring to the table as a value to us, and that helps to start up a conversation about new technology or whatsoever. But other than that, I guess Katherine and Sabrina covered it all. Thank you.
Thank you all, everyone. So I guess I would love to continue conversation on this very interesting topic for many more hours ahead, but unfortunately we have to wrap up. And the best way to connect with speakers would be through organizers, probably, or through the HTVD platform. And I'm happy to, I guess everyone is happy to stay in touch for further Q&A. And thanks a lot, everyone, for, I would like to thank the amazing speakers today for the insights that they shared on the crucial part of combining innovation and business results and giving value to startups. It's super hard, and great that there are corporates who manage to do it successfully. So yeah, thanks a lot, Alexander, and HTVD team for inviting myself and other team members today to participate in this panel and host it. Yeah, thanks a lot, and I wish everyone a great day. Yeah, thank you.